Last week, we talked about here, Tuesday, we talked about that it's likely that market is going to go up to test 4,600, and we need to see what sort of the reaction will we get from the S&P 500 once it's touched the 4,600. If you look at the past, 4,600 is an axis line, axis level, but don't think about it as a single line like 4,600. We can take it as an area, if it's some buffer, something like this. After we see this day, there's presence of supply. Let's focus on these two bars. This is on Tuesday, this is on Wednesday, and let's talk about these two bars. Tuesday, Wednesday, and this is the volume respectively. We got the breakout and also tested 4,600. The target has been hit. That comes with normal supply, normal volume. The next bar, we got an increasing of the volume, but look at what happened. The progress to the upside on this bar is plus 0.2% compared to the previous bar plus 0.75%. It's so minor, so little. But that also comes with increasing of the volume. So what does it mean? It suggests that there's an increasing of the effort behind, yet it failed to push the price up. There is a tiny little progress to the upside, zero point 0.2 versus 0.75. This shows that there's supply that's actually keeping the movement to go up. There is presence of supply on this bar, and it shows up in the volume, and it shows up in the price. Next bar, we can expect a pullback, which it did, but what sort of the magnitude and what sort of the supply? Not too bad. Supply is similar to the previous day, but in terms of the magnitude, it's still relatively shallow. So we got a 1 bar pullback, profit taking. Actually, these 2 days, they are the profit taking bars, combo bars. And next day, there's an attempt to rally up, but there's a rejection tail. And also comes with slight increase of the volume compared to the past. There's slight increase of the volume on this 2 bar, but we did not see the downward results yet. And yesterday we got slight increase. This is a bit flat, I would say. Not much movement to the upside, but also no movement to the downside. So yesterday is up a little bit, like 0.4%, not too much. And volume is still on the low side. So far, based on the reaction from 4,600, the resistance level, and also based on the increasing of the supply on this 2 bar, and also this one, in total 3 bars with increasing of the supply, the result is still a shallow pullback. Look at this, still very shallow. If we compare to the past, this is a pullback, another pullback. Look at this pullback, so shallow. This is not threatening at all yet. We still need to see whether we'll have another push to the upside, because right now, although there is a reaction from the resistance level 4,600 with slight increase of the supply, we did not see the results to the downside, which is not that meaningful. This is too shallow. I thought that we might have an attempt to rally up and to uptrust and then to fail before we see a meaningful pullback, because last week I talked about that even if we did get a pullback all the way to about 4,500, which is the axis level, axis line, and to test this breakout bar, this is perfectly normal and is not that bearish at all. I'm still waiting for this kind of the movement to test the axis line somewhere around 4,500 and then to consolidate around here. That will be a lot healthy, a lot better, and that will provide a lot more opportunities for us to buy on dip as well, because right now a lot of the stocks are still way too extended. So it might take more time to consolidate, or it will need to come back down to test some of the meaningful level. That's the S&P 500. And short term, we already see that there is reaction and there is an attempt to go back up. We might see another attempt to break out and to test further resistance before we see more meaningful supply kick in, and then they will start a more meaningful reaction. But so far, this supply is still relatively low, not meaningful. In terms of the specific stocks, that is another story. We'll go through that shortly. during the US stocks watch list. For the rest of the index, let's take a look at Nasdaq. I think Nasdaq is very interesting. And so far, we can see that there is one thing stands out on this chart. That is this. Once we have this touch 16 previous resistance, let's take a look back. Take a look here. This is the previous swing point, 16K. And we did get a reaction from 16K. And this is the thing that stands out to me. There's a spike of the volume that only happened in Nasdaq 100. We didn't get that in S&P 500, didn't get it in Russell 2000, didn't get it in the Dow Jones, but only in Nasdaq 100. And that is also consistent with the Microsoft chart, Apple chart, Netflix chart. We get this kind of the spike of the supply. Nasdaq 100 might go into a laggard mode. Means that there should be a rotation going on from Nasdaq 100 into the rest of the sector. For example, S&P 500 is one and Russell 2000 is another. And of course, Dow Jones, we got a 30 stocks. If you look at the spike of the volume, this is meaningful. This bar is bearish bar and it closed below this bar. This is 1, 2, 3. 3 bars. This wipe out all again in these 3 bars. That is meaningful. And this spike of the volume is also meaningful. And in terms of the recovery, we did get quick recovery in S&P 500, but not so much in Nasdaq 100. So yesterday is a doji, and if we want to compare it, we can use this bar. So far, the recovery is negligible. It didn't penetrate into a quarter of this bearish bar, not to mention about 50% of this bar. If we look at this chart here, this is S&P 500, almost attack and into 3/4 of this bearish bar. Very quick recovery for S&P 500. And for Russell 2000, let's take a look here. There is an attempt to rally, but the results, it still shows rejection. Suggests that we still find some selling here. This is still within the downtrend, down channel. But in terms of the swing, like the strength within this swing up, is still stronger than S&P 500. We got a low here, and so far, this is still a higher low. In terms of the structure, it's still good, and we will need to see another attempt for Russell to test 2050. This is the next two targets, somewhere close to 2050. Let me zoom in the chart here, and let's use this. Here is like 2030, and this is 2010. This is the zone that we want to see get tested. Ideally, I would still like to see a breakout from this flag type of structure and into this previous swing high level, and then going into 2050, which is here. This is somewhere around 2050, which is the axis line, axis level. We get a breakdown, come back to have a test of this axis line, and then started a leg down, another leg down. 2050 is a meaningful level. Right now, this is still in a pullback mode, and we just need to see whether it will break out of this flag type of structure, something like this, break out, and then to go up. In terms of the volume, it looks healthy to me. Supply has been decreasing, even though it's in a pullback mode. Supply is still low compared to even here or even here. These are a low supply for the past few days. So a good sign for the market. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.